Good evening, friends. Let us cover up revision for insurance claim chapter. I hope you have got mind map with you. So first I am taking up loss of stock policy. But for any insurance claim, you must understand the word average clause. Average clause basically gives you proportionate amount of insurance claim. So if the amount of the policy that you took is lesser than the value of asset can be the stock value or the value of machine or the value of car or anything. If amount of the policy is lesser than the value of asset, then the claim will be percentage of insurance multiplied by net loss. So how do you find a percentage of insurance? Policy amount divided by value of asset into net loss. This net loss is after deducting salvage value. After deducting salvage value. So your claim shall be settled on pro rata basis. Next, if the amount of the policy is greater than the value of the stock or value of the asset, then obviously your compensation will be equal to entire amount of loss, whatever is the stock amount less salvage value. But observe the key word here. I have not written entire salvage value, I have written salvage value at cost. Salvage value at cost, it's not a market value. So value of the stock will be the cost or NRV, whichever is lesser. Now this is important note. If there is no average clause, then the actual loss or policy amount, whichever is lesser, will be given by insurance company. So normally every insurance policy will have this average clause, but if you don't have average clause, if the question comes and question says that there was no average clause, then obviously you have to take amount of loss or policy amount, whichever is lesser. So when we talk about a loss of stock, you need to first understand the timeline of events, and then you need to calculate the stock lost at the time of fire. So fire can take place at any point of time, which will normally result into breaking up your accounting year. So your accounting year ends on 31st March and the fire took place on 15th of July. So that 31st March 2018 till 15 July 2018 is known as reconciliation period. It is known as reconciliation period. So for that reconciliation period, whatever transactions have taken place, you have to identify those transactions appropriately. So you have to have previous accounting year and you have to have reconciliation period or a broken period. So calculating the stock at the time of 15 July is what is important. It is nothing but inventory reconciliation statement. But instead of preparing a statement, we follow a flow of accounts. So what we do is we prepare a trading account for the previous year or multiple years, so that we get to know about the profit margin in the previous year. We always make an assumption, unless otherwise specified, that the same profit margin has been continued. So we find out the GP ratio of the last year or average of the multiple years. While taking an average, you should be always careful. There can be either a simple average or there can be a weighted average with the weights being given in the question to you, or there can be compounded average, CAGR, compounded annual average growth rate. If question is silent, nothing is given, we use simple average of GP ratio of the multiple years. But remember, it can be compounded average also. So we find out the GP ratio of the past, either 1 year or multiple years. Then we make an adjustment to the GP ratio due to the changes that have taken place. Please remember, gross profit is a function of quantity and margin levels. Now, since gross profit is basically sales minus direct expenses, we assume, for the sake of chapter, unless otherwise given, all direct expenses are assumed to be variable. If I assume all direct expenses to be variable, because nothing is given, then the quantity becomes irrelevant for deciding GP ratio. quantity is not relevant to decide GP ratio if direct expenses are assumed to be variable. So what factor matters? What is relevant for GP ratio is a margin. Margin is a gap between your selling price and your cost price. That is relevant thing. So you should adjust for the changes, and very importantly, you should understand the impact of the changes on profit on opening stock items. So whenever you are, last year I had a gross profit ratio of 30%. This year there is a change in selling price. So you will always have the items purchased in the last year and sold in the current year. On those items you have higher gross profit as compared to the items that are purchased in the current year. Let's say current year mein purchase price has also undergone a change. So whenever selling price changes, you should be very careful while solving a sum, because there is something sold out of opening stock and something sold out of current year's purchase. So whenever there is a change in GP ratio, identify cells into two parts. Then we prepare a memorandum trading account for that broken period, which is nothing but reconciliation statement. So it is nothing but forward reconciliation statement. Objective is to just identify your profit or your closing stock. So once we get a stock on the date of fire, we can find the amount of claim. Amount of claim is found out by using average clause. So there are various important points on which you people can make a blunder. So I have given those points. How do you estimate a policy amount for loss of stock? Policy amount estimated is nothing but estimated stock. Whatever stock you estimate at the time of fire, this estimated stock will be derived through budgets. Then you should identify the previous year and broken period appropriately in the question. Which one is a previous year, which one is a broken period. There are some special items that appear in a trading account, like goods sent to consignee, goods sent on consignment. These special items hai, goods sent on consignment. There can be drawings of the goods. There can be sell on approval. ये स्पेशल आइटम्स आते हैं आपके ट्रेडिंग अकाउंट में, इनको कभी भी मत भूलना. There can be abnormal loss. There can be goods given as a free sample. So some of these items are appearing at cost. So you should identify these items appearing at cost, and remember, if there are goods sent on consignment or goods sent at another branch or another shop, fire does not take place there. I had given you one test question where there are multiple locations and goods were sent from one location to other location, and the fire was at only one location, and you people had calculated the claim at all locations. So identify such transactions. GP ratio can be percentage of cost, which is known as markup. क्या बोलते हैं उसको? Markup. And it is called as a percentage of sales. It is called as margin, GP margin. तो क्वेश्चन में मार्कअप दिया है या मार्जिन दिया है, वो ठीक से पढ़ना और कन्वर्ट करना. 1/3 of cost is 1/4 of sales. So 1/5 of sales is 1/4 of cost. For example, so it is m by n of cost is m upon m plus n of sales. Impact of change in selling price. तो आपको क्या करना पड़ेगा? Whenever there is a change in selling price in the current year, you have to identify sales during the reconciliation period. Sales during reconciliation period to be bifurcated into two parts. Sales out of opening stock and sales out of new purchases. You should be able to identify a breakup between the two. Stock at multiple locations, if it is there, fire affects only one location. Treatment of firefighting expenses. Now there are two treatments possible. You should add to net loss. Add to net loss. This is one treatment. Another treatment is compute claim first and then add firefighting expenses. दोनों में आंसर अलग आएगा. both the methods you should present in the exam, or you should present one method and write a alternative note about the second method. In the test, I had followed the second method. I had calculated the claim first and then I had added firefighting expenses. Though I personally find first method to be logical. Net loss is equal to stock in the godown at the time of fire minus salvage value plus firefighting expenses. That is a method 1, but there does exist another treatment also. So you should write a note about another treatment. Whenever there are exceptional or abnormal items, you should prepare a columnar trading account. What is exceptional items? Items having different profit margin. You should rectify the error. Especially important errors are undervaluation / overvaluation of stock. Whenever the question says goods are valued at 90% of the cost and it does not give you reason, it should be deemed that it's an error and you should rectify the error. Similarly, capital expenditure may be booked as a revenue and vice versa. Salvage value should not be taken at selling price, it should be taken at cost. I had dictated one sum because we are going to find a net loss. Net loss is equal to net loss. What was the formula for net loss? Stock minus salvage value. Now this stock is at cost. Cost or NRV, whichever is lower. So salvage value should also be at cost. Then only comparison can happen. Otherwise net loss will be wrong. In case goods are taken over by insurance company, don't deduct salvage value. क्यों? आपके पास रहे नहीं goods, don't deduct salvage value. क्यों? पर भाई इंश्योरेंस कंपनी गुड्स लेके गई तो क्या करूं मैं? Reconditioning, repairs और refurbishment of salvaged goods. D चाहिए वहां पर, S हो गया. Ignore. This is MBKL, मामू बनाने के लिए. Examiner may give you that whatever goods are salvaged are refurbished by you by incurring so and so expenses and they are resold by you at so and so price. That does not affect the calculation of insurance claim because that is an event taking place after the fire. In one of the test questions I had given you this particular point where there is a refurbishment done. So profit loss on refurbishment does not affect the calculation of insurance claim at all. It does not affect a claim. It does not affect claim. Last point of the chapter is loss of profit policy. So whenever you take a loss of profit policy, it is a consequential loss of profit policy. Under this policy, you are going to get a compensation for whatever gross profit you lost during indemnity period. Whatever gross profit you could have earned during indemnity period but you did not earn, that will be compensated under the insurance policy, plus whatever additional expenses you incurred towards a fixed cost during indemnity period, they will also be compensated, plus firefighting expenses will also be compensated if they are already not compensated under loss of stock policy. So basically this policy is for compensation of gross profit. The word gross profit here is nothing to do with the accounting word of gross profit. This gross profit is calculated in a reverse direction as net profit plus standing charges. That is a gross profit. Utna aapko compensation milna chahiye, assuming you are done a full insurance. So before we learn the steps, you should learn the timeline of various events. So whenever the fire takes place, from the date of fire or that event till the date of restoring your business back again in a normal condition, we call that as indemnity period. And you have to find a corresponding period in the previous year. So in my example, it was July 2018 to September 18. So you have to find a corresponding period of July 17 to September 17. That is called as corresponding indemnity period. So first is indemnity period and corresponding indemnity period. Then you have to find previous accounting year. So whatever is a previous year, fire took place on 1st July, books of accounts were closed on 31st March. That is a previous accounting year. And then you have to also identify immediately preceding previous year, that is relevant for the purpose of calculation of SPAT, standard profit on annual turnover. So immediately preceding 12 months, you should identify. Remember, out of that, some months are in the previous accounting year and some months are going to be in current accounting year. Whatever months are there in the previous accounting year, you have to add a growth to it, and whatever months are there in the current year, you are not supposed to add a growth. So basically from this chart, I come to know that there are 4 periods which are relevant: indemnity period, corresponding indemnity period, previous year, and immediately previous 12 months, that is immediately previous 12 months. ये 4 periods आपने पहले ठीक से identify करने चाहिए, and then only you should learn to apply the steps. But remember, during indemnity period, whatever profit we could have earned but we did not earn because of fire had affected our business are only going to be compensated, plus the increase in the fixed costs that we did during indemnity period to make more sales will only be compensated subject to certain limit. Let me explain various. So let us understand the various steps for calculation of loss or profit. First, indemnity period. Indemnity period is going to be actual indemnity period or allowed indemnity period, whichever is lesser. So it should be lower of 2, actual or allowed. Then we should compute short sales. How do you compute short sales? Like this. Next page we have. Short sales is sales during indemnity period in the last year or a previous year. This is corresponding indemnity period, but to that we should add growth or decline. Sometimes you should be very careful about hidden growth. Question does not give you growth rate specifically. You have to calculate growth rate from the data of previous year and current year. So hidden growth is compare previous year and current year, certain months. So by comparing certain months or certain periods, like fire took place in 4th month of the current year. 4th month of the current year. So you have a data of first 3 months of the current year and first 3 months of the previous year. So you can calculate hidden growth rate even if the examiner does not give you a growth rate. Or if examiner has given you data of multiple years, you can identify growth year on year basis. So hidden growth rate is by comparing previous year and current year certain months, or compare multiple years of the past. Multiple years of the past. Now this growth rate can be obviously simple average or weighted average or compounded average. Compounded average is logical. In one question I had shown you both the calculations. So you add the growth, to which we call as a standard sales. This is the sales that we could have achieved less actual sales. Now actual sales that have taken place during indemnity are bifurcated into 2 parts due to additional standing charges. Due to additional standing charges and due to other factors. By default, if nothing is given, we assume entire sales due to additional standing charges. All sales that have taken place during indemnity period are assumed to be due to additional expenses. That is why insurance company gives you compensation for additional expenses. So you incur additional expenses due to which you make sales, due to which short sales come down. Short sales come down, automatically your claim for a gross profit comes down. That is why insurance company allows you to give compensation for additional standing charges. So step 2 is a short sales. Short sales is the sales that could have been made minus sales that have actually been made. Then we calculate earning ratio. How do you work out earning ratio? It is net profit plus insured standing charges minus non-operating income, if any, divided by sales. This is for previous year. This is for previous year. So you have to find a previous year, and then for that particular previous year you find out earning ratio. It is like a gross profit ratio, but it is not a GP ratio, because it is net profit plus only insured standing charges. If you have insured everything, obviously कोई problem नहीं रहेगा. Earning ratio. So gross profit lost, claim for GP loss is a multiplication of step 2 and step 3. Please remember, there can be change in earning ratio also, growth in earning ratio. So if earning ratio that you calculated for the previous year was 23% and examiner says it will likely to go by 5%, don't do 23 plus 5% of 23 equal to something something. ये गलत है. What is correct? 23 plus 5, 28 is correct answer. So claim for GP lost, then we calculate a SPAT. SPAT is nothing but amount for which you should have taken an insurance. Basically, you should take an insurance for 1 year's gross profit. Now, which 1 year? ICAI says you should take immediately preceding 12 months for the purpose of calculation of SPAT. That can be debatable, but we take a 12 months preceding the fire. So 12 months preceding fire, out of which some months are in the last accounting year, some months are in current accounting year. Growth is added only to A. We take a subtotal. To that we multiply earning ratio, revised earning ratio, not the earning ratio for the previous year, and we get SPAT. SPAT is insurable amount. If policy amount is higher than the SPAT, it is over insurance. Average clause should not be applied. If SPAT is lower than policy amount is lower than the SPAT, it is under insurance. If there is under insurance, obviously average clause will be applicable. Step 6, claim for firefighting expenses. It will be allowed to the extent of lower of following items: expenditure, firefighting expenses, or expenditure into SPAT upon SPAT plus uninsured standing charges. That is just to reduce amount of claim. So expenses into SPAT upon what? SPAT plus uninsured standing charges. This is allowed. Step 7, claim for additional expenses. Claim for additional expenses के लिए you have to understand profit due to expenses and the formula. What is the formula? Formula ये है. So profit due to expenses is sales due to expenses into earning ratio. If nothing is given, we assume all your sales is due to additional expenses, or formula, whichever is lower. Lower of these two will be given as a claim by insurance company. Then you make a summary. Summary is gross profit lost, add claim for firefighting expenses, add claim for additional standing charges, less saving in insured standing charges. Do not take savings in total charges, savings in insured standing charges only, savings in insured standing charges. Sometimes examiner gives these savings on per annum basis, sometimes given on per annum basis. अगर per annum दे दिया और आपका indemnity period 3 months का है, तो convert it for indemnity period. So convert for indemnity period. Savings can be given per annum, ठीक है ना, but मेरा indemnity period 3 महीने का, तो you need to find savings for 3 months. That is summary. And then finally amount of claim. Amount of claim will be calculated by applying average clause. So claim will be equal to policy amount divided by SPAT. Policy amount divided by SPAT is a percentage of insurance. So how do you calculate a percentage of insurance? कितना insurance लिया तुमने? Policy amount divided by what? SPAT into net loss. इतना claim आपको मिलेगा. So indemnity period calculate करो, short sales calculate करो, earning ratio निकालो, claim for GP lost. This is first part. Then claim for firefighting expenses, actual expenses or expenses into expense upon, SPAT upon SPAT plus uninsured standing charges. Then firefighting expenses हो गया, claim for additional expenses, lower of the two, which two? Profit earned due to the sales expenses and formula. These are the important points. You should be knowing a growth rate. There are 2 growth rates which you should watch very carefully. Growth rate in sales amount, which is relevant for short sales, and SPAT calculation, that is sales amount ka growth rate, and growth rate in earning ratio. They are totally different. Hindustan and Pakistan. This timeline is what we have understood. Thank you. It's down under 25 minutes. Bye-bye. Do revise it today.